Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 23rd of September, ending Friday, the 27th of September, 2019. Hope you had a good trading week last week. It wasn't very interesting. We had triple expiration. Markets did as you would mostly expect. Look how flat. Here's the ES front month futures contract. This is the daily chart of the broad market and futures form. Look how flat it was, not just last week. It's actually been almost 10 days in a row, stuck right under that risk line from the 13 sell signal back around 4th of July. I mean, I don't know how things get any more technical than that. Let's take a look at what's going on in the daily charts. Then we'll look at the intra-week action, talk about the economic calendar for the week ahead as we head into the end of September. Remember, the following Monday, not this one, but the one after, will be Monday, September 30th, will be quarter-end statement prints. And then we get into October. Obviously, this around here is the time of year where the market seems to usually start to get exciting. Crude oil up 66 cents on Friday to 58.75. Gold up $5.40. S&P cash lost 14.72. The Nasdaq 100 down 78.24. The stocks down 29.07. Biotechs gained 26.08. The Russell 2000 down $1.70. The VIX gained $1.27. The trend up 1.34. I'm closed at 1.34. That puts the 10-day back at 1.12. But remember, we had that trend reading. So far, what have we gotten? We've got the sell signal on the broad market. I'm going to show you something else in a minute that we've never gotten back above that risk line. We've had the trend reading, the 10-day moving average under 0.85 about 8 days ago. That was a sell signal on the market. Sometimes it takes 2 or 3 weeks to actually kick in. And, of course, we've got the continuing inverted yield curve, all sorts of issues out there. Nasdaq volume, 3.3 billion shares on Friday. That's just triple expiration volume. It's just them rolling out of the options positions and matching them off with stock positions that the floor held, so it's not a big deal. It's typical. Nasdaq advanced decline ratio, literally negative 36, almost exactly as many stocks up and down on the New York plus 96. Same story there. Google loses $8.91. Remember, that's a flat advanced decline ratio considering the Nasdaq's down 78 and the S&P's down 14. Google down $8.91. Apple down $3.23. Netflix down $15.85. It busted that risk line from the 13 buy signal. Remember, we bounced along that thing several times. Now we've busted that on Netflix. Amazon down 27.34. A lot of the big FANG stocks starting to crack here, and this is important. Tesla down $5.98. Facebook just down 21 cents, holding up pretty well. Goldman Sachs down $1.49. That's a blip. The TLT, the 20-year bond ETF, was actually up $1.85. The Dow was down 159. Let's go back and look at the S&P for a minute because I want people to know about this. This is the daily chart, so we talk about that 13 sell signal that's holding us, pretty locked in right now. But also, go look at the weekly chart of this thing. We had a 13 sell signal here also a few months back, and it's still holding us as well. Okay, and it's actually holding better even. So the daily chart has one, the weekly chart has one. But here's the thing that's even more interesting: the monthly chart. Isn't that interesting? So the monthly chart, for the first time in a while, would have a 13. Now, one of the things I like to point out to people with these signals is when you get a 13 signal, if the stock or the market, whatever it's on, shakes off that signal almost immediately, and then pretty soon after gives you another 13 signal in the same direction, it's like a 95% hold, meaning it works 95% of the time. So when you look at this S&P index, I mean, you can see from 2002, this is the monthly chart, so it goes back that far, right? From 2002 all the way to 2016, we never even got a 13 signal on the monthly chart of the S&P. We finally got one in the middle of 2016, and we shook it off within a couple months. Now we've got another one. If September, that last day I was telling you about, a week from Monday, if it were to close a little higher than this at all, that would be a 13 signal back-to-back almost, and that is very important for what that could mean for October and beyond. Doesn't mean we have to fall apart immediately, but you've got so many signals lining up here. Also, when you look at the Nasdaq side, we're not quite there on the Nasdaq on the monthly, but let's go back and look at the weekly. 13 sell signals still in place there. So, we're seeing a lot of very important key signals on the S&P and on the Nasdaq that we don't usually see. That with the trend and the inverted yield curve doesn't bode well for the longs. Let's look at the intra-week action. So I'll switch this to 10-minute candles so you can see the whole week on the ES. So Monday we had a little gap down, and then look at this. Monday, Tuesday, completely dead flat, a little pop late in the day on Monday. Now remember, on Tuesday. Now remember, with the Fed announcement. So then Wednesday we gapped back down into the range we were stuck in. So basically we spent from the opening 15 minutes of Monday all the way until the Fed announcement Wednesday at 2 p.m. in this tiny little narrow range. Then the Fed announcement initially we broke down, then we reversed and came back up. Thursday we gap up, made the high of the week and came back to close even. Friday we gapped up, and even though it's triple expiration, we went lower. Where did we close the week? All gaps are filled, but we closed the week right where we opened the week, essentially, in the same candle. So that's a lot of nothing for nothing. And if you look at the Nasdaq side, not much different. So it was not the most interesting week from a trading perspective. The news were off the Fed and some other news on Friday, and that is that. All right, so what does that mean for the week ahead? Hard to say. Again, we continue to look for a downside move. Now, in terms of economic data coming out this week, Monday, these are Pacific time, so add 3 hours. At 9:45 a.m. on Monday Eastern time, flash manufacturing and services PMI numbers. We've got some Fed members speaking on Monday. On Tuesday at 9 a.m., housing price index, consumer confidence at 10, Richmond manufacturing index at 10. On Wednesday, new home sales at 10, crude oil inventories at 10:30. We've got on Thursday, the final look at GDP for the second quarter. This is the last adjustment. It's only going to be about 2% annualized, which is not great. No surprises there, though. This is the third adjustment on the GDP. Should not move the market. The goods trade balance, preliminary wholesale inventories, the weekly initial and continuing jobless claims numbers. Pending home sales at 10 a.m., natty gas at 10:30. An FOMC press conference. I'm not sure which one that's not about a rate announcement. We just had that. Friday, durable goods, personal income and spending. Another Fed member speaking. All of that at 8:30 a.m. Eastern time, and then revised University of Michigan sentiment at 10. So that is the week ahead. And I'm just going to show you because I'm going to be out a lot of the next week. There's only a few things the next week, although we do get the unemployment rate and the trade balance number, but there's never any surprises in there currently on that. All right, charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading